And we are live. Good morning, everybody. It's very good to see you. I know it's been a while. Hey, Carlos, no sound here, no sound and no video, sir. We're just getting started. I have a lot of things that I do in the morning in order to get everything going correctly, and it takes a minute. It takes a minute. Actually, you know what I'm going to have my guys do? I'm going to have them make a good intro and outro for us. That'll help a lot. There's a lot to talk about today. A lot going on. I'll tell you that. I am back. I was out for a bit there. I got some kind of funky funk. I think some kind of engineered stuff. Welcome to the Impact Money Show. We're broadcasting live from the heart of Washington, D.C. on this brisk Wednesday, February 26, 2025. It is around 6 a.m. Eastern Standard Time. And let me paint the scene outside of our studio. Temperatures hovering at a chilly 38 degrees with a light breeze rustling through the leafless trees along the Potomac. The sky is partly cloudy, casting a soft gray cap over the Capitol. And the forecast says we might see a few flurries. Believe it or not, this is what I'm hearing. I don't believe that. A fitting metaphor for the flurry of economic and global shifts we're driving into today. It's the kind of weather that makes you grab a coffee, settle in, and think about where your money's headed. And that's exactly what we're going to unpack here. Before we dive into the whirlwind of news, I've got to take a moment to reflect on an incredible high note. Just last week, we had the privilege of joining some of the sharpest financial minds on the planet at the Global Family Office Investment Summit in Miami, hosted at the stunning Trump International Beach Resort and led by the one and only Anthony Ratosa. Let me tell you, folks, it was nothing short of spectacular. Picture this: sun-soaked beaches, shimmering waves, and a room packed with billionaires, deal makers, and visionaries. Family office leaders from every corner of the globe, all under one roof. The energy was electric. The conversations were next level, and the connections forged there are already sending shockwaves through the wealth management world. Anthony Ratosa didn't just host a summit, he orchestrated a movement, bringing together the brightest to strategize, invest, and shape the future of money. We walked away inspired, invigorated, and ready to bring that momentum right here to you. So buckle up, because today's show is fueled by that same fire. Now let's get the pulse of what's moving money this morning, because it's a wild ride out there. We're starting with the U.S., where the financial landscape feels like a tug of war between Main Street struggles and Wall Street hopes. Consumer confidence just took a gut punch, dropping nearly 7% this month to 98.3 on the Conference Board's index, the lowest in over 3 years and the steepest fall since 2021. Why? Federal layoffs are hitting like a freight train. Talked a bit about this. Thousands of government workers suddenly staring at empty bank accounts, or soon to be empty bank accounts, right? A lot of them are still getting paid for a little while, but they know the end is near. I want to give a shout out to Carlos. Carlos, thanks, man, for commenting as well, letting me know. Even if it was planned, I always appreciate the feedback. Carlos said, "Hey, there was no audio in the very beginning." It is something else. I can tell you, living here in Washington, D.C., I mean, there's a lot of people getting fired, thinking they're getting fired, knowing they're going to get laid off. Picture a family in Ohio, dad's out of a job, mom's juggling the bills, and now President Trump's 25% tariffs on Canada and Mexico, set to kick in March 1st, are about to make everything from gas to grocery prices pricier. That's cars from Ontario, oil from Alberta, avocados from Jalisco, all jumping in cost overnight. Credit card balances are already at 6% year over year per the Fed data, and you can bet that number is climbing as folks lean on plastic to keep the lights on. Retail spending shuddering. Yesterday's stock dips show Wall Street betting on consumer pullbacks. You might be feeling the pinch already, skipping that vacation to afford the pump. Although the pump right now is cheaper. The pump is cheaper right now. We'll see how this all unfolds. But here's the flip side. The Republican-controlled House just handed Trump a big win late last night, passing his tax cut and border security budget. We're talking trillions in cuts, personal income tax dropping, corporate rates potentially sliding back to 21% or lower, and a hefty boost for border tech. Historically, tax breaks like these, think 2017 tax cuts and the Job Acts, ignite sectors like manufacturing and energy. After 2017, Caterpillar and Exxon saw their stocks soar 30% in a year. Imagine factories humming again, jobs popping again, companies buying back shares. This time, with border security baked in, defense contractors like Lockheed Martin or border tech firms, drones, sensors, wall materials, could cash in big. Small businesses, maybe your local mechanic or bakery, might pocket more from pass-through deductions, freeing up cash to grow. But here's the catch. A slashed government spending, rumored at $2 trillion, that is the goal, $2 trillion a year is the goal, could kneecap the public sector, jobs and contracts, looping us right back to that confidence drop. It's tricky. And my wife's definitely complaining. Of course, as you know, my family, as you probably know, of course, we have a lot of ice skaters in my family. We're ice skaters. We don't really coach that much anymore these days, but my father-in-law still does. The people that, a lot of our friends and family rely on to pay the bills may not have as much money. If you're a government worker and you're used to making $160,000 a year, whatever it is, and you're paying a couple grand a month for your kid to ice skate, that might change. And so that pinch is real. Doesn't mean it shouldn't happen, but it's real. It's a high-stakes gamble. Will tariffs and layoffs batter household budgets, or will tax cuts toss a lifelines to industry? That's the story we're tackling today. Markets are reacting already. Yesterday's U.S. stocks hit one-month lows, with the S&P 500 down 0.5%, about 0.5%. NASDAQ off 1.4%, and the Dow barely clinging to a 0.4% gain, thanks to retail giants Walmart and Home Depot. But futures this morning are flashing green. Dow futures up about 0.25%. NASDAQ futures are stronger at almost nearly 1%, hinting at a bounce back day. Is this a breather or a turning point? We'll dig in that as stocks wake up and we join with our good friend Matt Dixon shortly. Zooming out globally, chaos and cash are colliding. In Haiti, armed gangs launch a pre-dawn attack in Port-au-Prince, Delmas 30 today. Details are murky, but deaths are reported, and it's a grim escalation that could ripple into commodities markets or spook investors. Closer to home, the Department of Justice might have nabbed an illegal alien smuggling ring. Chatter is buzzing, though no official word is out yet. South Africa's Eskom just suspended load shedding at 5 a.m. today after boosting power capacity, relief for strained economy, maybe a nudge for metals demand. The Ukraine war's third anniversary is casting a long shadow. Overnight, exposts say Russian forces pushed Ukrainian troops out of 3 cursed settlements today. Moscow's clawing back ground after Ukraine's incursion last year. Logistics are crumbling. Sumy Oblast might be next. Trump is in the thick of it, claiming yesterday that Putin's open to European peacekeepers for a ceasefire. Francis Macron supposedly agreed Europe foots the bill. Zelensky is headed to D.C. this Friday to hash it out with Trump. That'll be funny. Who's pushing for U.S. access to Ukraine's rare minerals to offset aid costs. Putin's countering with Russia's own reserves, lithium mining ramping up there too, per his Friday push. This mineral tug-of-war could tilt commodities markets, rare earth minerals, battery metals, all up for grabs. Reconstruction's $524 billion tab over a decade. Massive. You thought the war was expensive. That's what I've always been saying. Thought the war was expensive. Wait till you see the reconstruction. G7 is mulling $50 billion in 2025 aid from frozen Russian assets. Europe's pitching in. Ursula von der Leyen dropped $3.5 billion in Kiev yesterday, plus sanctions and defense boost. Excuse me. The UK's Keir Starmer pledged $13.4 billion more for defense in 2017, the biggest since the Cold War, meeting Trump tomorrow. Defense stocks like BAE Systems may pop as Europe steps up. Asia's no slouch either. China's Vice Premier He Lithing and Treasury Janet's and the banking cartel, U.S. Treasury Janet Yellen, talked today. Trump's 25% tariffs on Chinese imports loom, a $40 billion hit to the U.S. wallets if they stick. Retailers like Walmart are bracing for price hikes. Domestic manufacturers like Caterpillar could see a 5 to 10% boost. Alibaba is riding high. Shares surged 13% in Hong Kong yesterday off stellar Q3 revenue and a $53 billion AI bet, rivaling Amazon's cloud game. India's pumping 5,000 of their currency core into pharma dominance by 2030. Sun Pharma might shine. South Korea's birth rate ticked up. 240,000 babies, a rare win that could shift long-term spending. Crypto's been a roller coaster. Bitcoin hit $86,000 over the last few days, nearly kissing 100,000 last Thursday night. Now trading at about 89,166, up about 1.5% today. MicroStrategy's Michael Saylor dropped $2 billion, 20,356 Bitcoin last week. Buying. Altcoins bled even worse, but they are rebounding stronger, which is how it works. ETF outflows hit a record $2.4 billion this month. Tariffs and a $1.5 billion Bybit Ether hack last Friday spooked the herd. Short-term chop ahead, but 81,000 is the floor, or 86,000. Analysts eye 200,000 by year end if Trump's Bitcoin reserve talks hold. Precious metals, gold is at 29.30, silver's at 34.20, up 0.3 and 0.5% respectively. Down 2 to 3% on the week, but up 4 to 6% monthly. Gold's 8-week streak hit record highs. Central bank spot 1,000 tons of gold in 2024, while silver's industrial edge shines with solar demand. Safe haven bets versus growth risk. Household might stash more as inflation looms. Elon Musk shaking things up again, emailing feds to justify their jobs or quit under his doggy efficiency gig. Agencies like the Pentagon and the FBI pushed back, but Trump's egging him on. Get more aggressive, Trump says in a post on Saturday. Musk was at CPAC, as well as the rest of them, floating doggy dividends. And I know people say Doge dividends. I still say doggy. 20% of savings to taxpayers. Tesla's stock dipped 1%. Sales lag, focus splits, but billions could shift if he slashes federal fat. AI is on a tear. China's DeepSeek preps a new model. Alibaba open source video AI today. Qatar's $5 billion Scale AI deal revamps government. And Microsoft's Copilot free voice upgrades boost workflows. Robotics, that is jumping into the humanoids. Figure AI, $39.5 billion valuation talks heat up. Robots could slash cost or spark new markets. The Supreme Court flipped a 25-year death row case yesterday. Richard Glossip gets a new trial. Spotlight on the justice. It's all connected. Tariffs, tax cuts, tax and turmoil. Stick with us. I have with me here the great Matt Dixon with the Market Report. Sir Matt, how are you?
Hey, good morning, Bruce. Good to see you back again. And it's
Yes,
a pleasure
sir.
to be back with you. So there's loads been going on, as you say,
Yes.
in the world with Trump and all his, he's actually seemingly getting results. So this is good.
It really is something else. I mean, everybody's talking about it over here. Everyone's pretty excited about the economy. I can tell you, people want to be here. People are really thinking that we're leading. We're leading the world right now. Hopefully, it all works out.
I mean, they're excited about the economy, but also there are many, many concerns about the economy as well, because
Yes.
there are some issues out there. So I trust you can see my screen, Bruce.
Yes, sir. We can now.
Fantastic. So I'm just looking at oil, and the reason I look at oil, I've been looking at this for a long time, and I believe that oil has a big impact on inflation. Now, as we're aware, inflation has been a bit of a problem in the US, and it's why the Fed paused the interest rate reductions. So, and they're actually looks like they're going to pause again at the next meeting in March. 95.5% chance that rates will stay on hold again. And this is because the inflation is still elevated. And despite falling growth, and we do actually have now growth is beginning to decline, employment is beginning to show some worrying signs. There's a lot of worrying signs out there, but they can't reduce rates whilst inflation is not only above target, but actually accelerating above target. So this is a big problem. And actually, one of the Trump policies that was put in place almost immediately with the basically the taxes on imports, that was actually very, very inflationary. So he pulled back on that straight away, pretty well, with Canada, with Mexico, and so on. And now we're beginning to see inflation falling off again. I think there's a big worry. There's a bit of a shock when that happened, when he first imposed the tariffs. But having pulled back on those tariffs, markets coming back into order. We'll look at what's happened with Trump from when he won the election, from his actual inauguration, and we'll compare that with what's happening in the markets. And it's a very interesting story that we've got to tell there. But as I say, I'm looking at oil here, and I think oil is very, very, very important for inflation, because when oil prices are high, transport's high, cost of production's high, cost of heating, everything, costs are higher, so you'd expect inflation to be higher. Now, I've had this chart drawn up from a long time ago, and I said that we seem to be within some kind of channel here. We appear to be, and I put these asterisks at the boundaries of the channel. And when we hit the top of the channel, I said we're actually highly likely to come down in price. The oil price is actually highly likely to decline, because this is a long-term channel from further back than I'm showing on this screen even. And with the price of oil declining now, I actually believe, my thesis is that inflation will actually come back into an acceptable territory towards the 2% level. That being the case, that will actually enable the Fed, should we say, really, to reduce interest rates, and that will stimulate the economy, and it'll actually provide more money for risk assets like Bitcoin, crypto, S&P 500, etc. So that will be a great sign. But we can see we possibly don't have a long way lower to go with oil. We're currently at 68.93, around about $69. And the bottom of this channel is somewhere around $63. So we're just talking somewhere around 10% lower for potentially for the oil price to take a bounce. And that actually fits with my longer term thesis that I do think that we are certainly headed for a pump right now. And although everybody thought the sky was falling in with stocks and risk assets and crypto over the last few days, I'm probably one of the few that said that we're not going to advance straight to all-time highs, that we will actually get a severe pullback, relatively severe pullback. And that's actually what we've seen. Now people are swinging the other way and saying, oh, okay, we've got serious problems now. Crypto is going to continue to go down. Now, this is probably the time to start thinking that maybe crypto will turn. And if we do continue to see oil price reductions here, and we might even see more of that with the peace initiatives going on with Ukraine and Russia, we might see more weakness in oil price, and actually grain as well will probably be reducing. So these important commodities will be reducing in price. They are big price drivers within the economy. And so if they fall in price, I think we're likely to see inflation falling. And that's probably going to be a great sign, because it means lower interest rates will begin to resume again. The Fed will be able to, I mean, what's been causing a few worries is the QT, the quantitative tightening. But I think that's probably going to come to an end. We will start lowering interest rates. And I actually believe if the economy continues to fall, we'll actually go back towards QE in the future. And if you remember, QE actually really pumped risk assets. So we may actually have a major pump left in these markets before any real trouble hits. So that's my thesis really on linking oil with inflation, with the economy, with risk assets. So let me just jump into, I mean, we will look at Bitcoin, but I want to look at Solana here and just focus on, maybe remind you as to why I think that we're at or near a turning point on the markets. Now, the crypto markets and a lot of the risk assets are highly correlated, meaning they all move pretty much in the same direction at the same time. That's not entirely true, but there is a good deal of correlation across the board. So when I'm looking at Solana here, we could go back, and actually did this in detail yesterday, went right back. Again, I just cleared my chart completely and started from the FTX low with Solana. And from that, I reconstructed my chart and labeling and counts and everything, and came to a conclusion that this was the top of wave 3 for Solana. And what this movement down, that was, by the way, the all-time high for Solana, $295 per Solana. That was the all-time high for Solana.
And when was that?
That was, let me just see, that was on January the 19th.
2025.
So interestingly, that was just a couple of days before Trump inauguration. So thank you for reminding me about that, because actually the low in the market was just before Trump actually was elected. When I'm talking about the low, I'm talking about a local low here. Just before Trump was elected was somewhere around here, 5th November, somewhere around there. That's when Trump won the election, wasn't it?
Yep.
And actually, it became fairly clear he was going to win the election in the last days. So in the last days, we saw a local low here on Solana, really interesting level. Just look at the level I've drawn across there. So that was really just when it became apparent Trump was going to win the election. And when he did win the election, we got the Trump pump, and the market pumped massively. Then interestingly, and I said this to a lot of people, that when he's inaugurated, we're actually going to see quite a sell-off in the market. And I said that on this show, and I said this to some big investors out there, and nobody really believed me at the time, but it's exactly what happened. A couple of days before, in fact, the day before, I think it was, the inauguration, the price of crypto started falling, and the price of Solana started falling. Now, the big question on everybody's minds is this the all-time high top of the market, and now we've started to resume downward movement, or is this just a correction? Now, when I look at this from an Elliott wave perspective, I can see we're here, and you can see we have a movement down that I've labeled as wave A. You can't really see the internal waves, but I can assure you, if you look on a shorter time frame, 1 hour or 4 hour, you will see I've got 5 waves down here, making it a wave A. And then we have an A, B, C, D, E. I've got labeled here as a triangle within this circled area. And a triangle is a very important formation within Elliott wave, because triangles can only occur in certain positions. So they can occur in a wave 4 position, a wave B position, or a wave X position. All of those being corrective waves, that means it's against the trend higher. But importantly, they cannot occur in wave 2 position. So this wave at 5 waves down, I counted as wave A. I could just as well have counted it as wave 1 at that time. But when I saw the triangle, I know that a triangle cannot be a wave 2. So then I can't count this first wave as wave 1, because this cannot be wave 2. So I have to label the 5 wave move down not as wave 1, but as wave A, as I have it here. And the triangle movement up has to be wave B. So what that tells me is that from the top, we have A down, B up, and work on a large C down. It's actually made up of a WXY, which is still a corrective move downwards. So what that tells me is that because this is just a correction down, and the actual impulsive direction is higher, and that's wave 3, this is wave 4, we still have a push to come to new all-time highs for Solana. And if that happens for Solana, then I'm absolutely convinced it's also going to happen for a lot of other cryptos, Bitcoin, XRP, many of the other cryptos out there. Some might not make all-time high, but I think the crypto will pump across the board. So as we see these inflation expectations diminishing, and then that means opens the doors for potential interest rate reductions, then that's really good for risk assets. So the oil price falling is a good thing, and it actually ties in, as I'm always talking about, the jigsaw pieces all fitting together. It ties in beautifully. So what I've done here, this is the daily, so you can just see it all easily on one chart, but I've got basically a wave A down, B up, and a C down, which is made up of, the C wave is made up of 5 waves, 1, 2, 3, 4, 5. So that's an A, B, C making a W wave. Then we have an X wave triangle. Remember I said triangles can occur in B wave position, X wave position, or wave 4 position. So here it's in the X wave position. So another triangle, and triangles are fairly rare, but we've got 2 of them in this fall. That's telling you even more so that this fall is corrective. So we've basically got the W, we've got the X wave triangle, and then the Y wave would need to be made up of 3 waves, and that's precisely what we have here. From the X, we have an A wave down, a B wave up, and a C wave down, making the Y wave, completing. All of this is a correction. All of it is a wave 4 correction. And I say completing, it's probably complete. We can't be absolutely certain with a correction because corrections hold a certain degree of uncertainty in terms of where they're going to reach. We have a lot more certainty when it comes to impulsive waves and Fibonacci extensions. There's a little bit more variability within corrections, but this looks like a good place to end. The reason being, this X here, I measured the first A wave down. You can see I put the Fibonacci measurement on there, 100%. I transpose that to the top of the B wave, and 100% takes me pretty well to where we are. Now, this is the most common relationship where the C wave equals the A wave, and we almost have it. To within a small amount, we almost have it. So I think there's a reasonable possibility that we've already bottomed out. If we haven't, we're there or thereabouts. And this will be an opportunity, in my view, to dollar cost average, because we cannot be certain that the correction is complete. It may even dip a little bit lower, who knows? We may dip a bit lower. And as we don't know for certain, what we are reasonably confident of is that this is a corrective move down. And so if you're dollar cost averaging anywhere around this sort of area, and if it dips lower, I would just add some more to it. Don't commit everything. Don't commit money you can't afford. But probably if you are interested in investing in crypto assets, this would probably be a very sensible dollar cost average area to be looking at building a position with the likelihood that we're going to push to new all-time highs for Solana here. So I think that's a pretty clear. And again, if I had time, I spent probably a couple of hours yesterday going through in minute detail the Solana price history, as I say, from the FTX low. And this was the final conclusion on the final wave that I came to, saying that we have another wave higher to go. But remember, this is wave 3 higher. If this is wave 4 down, the next wave up is wave 5. Following a wave 5, that is a completed impulsive cycle all the way back to the FTX low to potentially a new all-time high here. But after that, we would expect at least a very substantial correction. So if and when we do pump to new all-time highs, I'm going to be extremely wary, thinking that potentially we're going to see a sharp and nasty turnaround for the markets. So my overall thesis is, yes, we're going to see lower oil prices, and yes, it's going to bring down inflation, and yes, it's going to allow us to put more money in the system with lower interest rates, etc., maybe even printing more money, which will provide a pump in the market. But this is a final wave 5 pump in the markets, and it will also be just a continued pump, I believe, for the S&P 500, for the NASDAQ, for the Dow, for all risk assets. I think it's just going to be a final pump in the market before we see a rapid turnaround. And so then if we look at one of the currency pairs that we often use to measure where things are likely to go, and the yen is the carry trade, what I think we can potentially see is if we see a major worry in the market, we'll see this dollar yen go down, which means yen strengthening and dollar weakening. So at the moment, we've seen a bit of that, and that's why we've seen a lot of negativity in the crypto markets. We may see a little push up now in dollar yen because it goes with risk assets. So if we're going to see a pump in risk assets, we're going to see dollar yen go up a little bit. But I think that dollar yen, from this chart alone, has real potential to go much lower once we've had this little pump I'm talking about in risk assets, and we see maybe oil price lower. It's going to be good for risk assets. It's going to be good for the US dollar, probably short term, against the yen, that is. And so we'll see this move a little bit higher, but then I think we have a lot of room to go lower. So if we see this as an impulsive move down, this may turn out to be a corrective move higher. We still then have a big move down to go. So that would be a big sell-off in the carry trade. And if you remember, the carry trade is basically where people borrow money from the yen. They borrow in Japanese yen, where interest rates are still extremely low. Bear in mind, Japan has very high inflation at the moment. They are in an interest rate rising mode, unlike the rest of the world who are looking to reduce rates. They're holding them or reducing them. The Japanese are actually increasing rates. And so this makes the carry trade less and less popular because whilst at the moment people can still borrow at low interest rates in the Japanese yen, they are increasing interest rates. So it becomes more and more expensive to borrow in yen, which is actually the funding currency. And it means that there's less money available to put into risk assets, to actually invest in US dollar assets, etc. So there are some worrying signs in the background. We're not there yet. As I say, I think we're still set for another pump in the market, but there's some worrying signs, as I've said for some time, looking at the big picture. We're not talking really short term here, but the bigger picture, some worrying signs that will come through, I think, to give us real reason for concern. Just skipping around a few, because I think I've probably gone on quite a bit today. So just skip around a few. We'll have a quick look at Trump coin. Again, I think we actually showed our negativity towards Trump coin because it's purely a meme. There's no use case whatsoever behind it. And we said on previous shows, we expected this downward trend to continue. And it looks pretty much like a dead coin at the moment. All it's doing is finding lower lows and lower highs. So this is the definition of a downtrend here, lower lows and lower highs. There is no even effort to pump to any new high for the Trump coin. So it is proving to be just what it is purported to be, a meme coin, which was pumped hard on the listing on Binance. I think Binance sold a massive chunk when it pumped and made a lot of money out of it at the expense of an awful lot of people. Everybody's lost money basically now on this Trump coin, apart from the smart one, maybe Binance, who dumped the coin here. But everybody else has lost money because it's right now just about at all-time lows. So this is why we say, even with something that's potentially a game winner, you might think, being a Trump coin, it's just a meme. So be very, very careful. Do look behind at the fundamentals. A lot of crypto is driven by this sentiment. But if we look behind the scenes, we see that a lot of these cryptocurrencies are purely sentiment driven. There's no fundamental value behind them. And surely that cannot be a good reason to invest in something just because it's popular, because people can be, can change their mind very, very quickly. And if you start to get negativity, it's like the flu. It's very, very catching. And
well, I'll tell you what, that flu, man, that latest strand, that took me out for like 2 weeks. That was no joke. Just
maybe that's what this Trump coin has got. Maybe it's got that flu.
It's got the flu.
Yeah. So I was looking at the Solana there. That this is just another. This is actually the one I broke down yesterday and started to relabel it. I went back. This is actually on a regular setting here. You can see it's on regular. I went back and looked at a logarithmic chart for the for the early history further back, which you can't really see it very clearly unless you put it on logarithmic. Let me just go back to daily here. Hopefully you might be able to see. I mean, yeah, it looks very different here, but this was the first moves up. Again, we had a wave. You can't see it very clearly here. If you put it on logarithmic, you can see it, but I basically got a wave 1 and 2 in blue. Then the wave 3 in blue is made up itself of 1, 2, 3, 4, 5, with the wave 4 being a triangle here. I looked at this in detail. I looked at the Fibonacci relationships all the way through, both on logarithmic and regular. And all of, as I say, all those fib relationships fitted beautifully. The extensions were perfect. When you take time to look at an asset like this, which is a very liquid asset, and this is one of the assumptions for Elliott Wave to work properly, the asset needs to be fully liquid. And that's why, again, it can't be accurately used for a lot of low liquidity tokens. And there's a lot of low liquidity tokens and assets, stocks, shares, whatever. If they don't have real liquidity, they can't be really charted accurately. But Solana is a very liquid token. I'm very comfortable that this wave count is correct. So I'm very comfortable that we have just experienced just a correction and that we still have a push higher to go. So I've said that this can be A up, A or 1, because there's no difference between an A wave or a wave 1 here. 5 waves, they're both 5 waves. Got a potential wave 2 here. And then we could be beginning an impulsive wave 3 to the upside, or it could just be an A, a B, and a C. And then we're going to see that substantial downside I talked about. So they're further in the future. As I say, it's far more profitable for us just to focus on what is currently happening rather than look back too far. But it's still important to get the big picture. And whenever I'm charting, I first of all look at the biggest picture of all from when something started. That's when I start to then put my labels on, do my fib measurements, look at indicators, look at divergences, etc., etc. Then you can build the overall picture very, very accurately. So I think that's probably enough for today, Bruce. Loads to talk about because we've been away for so long, but there's a lot to digest there. But hopefully it'll give people some confidence that this market sell-off that we've had is just a correction. And even, I'll just go as a final thing, just look at DX, not DXY,
So
sorry.
US dollar, DXY.
Sorry, SPX I'm looking at, sorry.
SPX, stocks,
yeah.
the Dow,
So,
S&P 500.
Yeah, so again, people were getting a bit negative on the S&P, but I actually still believe S&P has somewhat higher to go. The reason it sold down, and again, I can probably put this in very, very quickly, we had some good, let's just see, some good bearish divergence. So we can see that we got let's just remove that one because it's confusing right now. So we can see, and I'll remove that one as well. So we can see basically higher highs on price and corresponding lower highs on RSI. And you just have to line them up perfectly. But basically higher highs on price, lower highs on RSI, that's telling you regular bearish divergence. So we knew anyway it was going to sell off. Lots of other indications, wave counts, all sorts of indicators you could have put on, but this is just a simple one that anybody can see clearly that this was the point to sell the S&P 500 if you wanted to sell short. But actually right now, there are indications that it's probably going to turn higher again, and we're going to see new all-time highs for the S&P 500, for other stock markets, for Bitcoin, for Solana, for cryptos, etc. So right now, I'm turning bullish. And if we look at that fear and greed index, there's been a lot of fear in the market last few days. That's probably the time to jump in. When there's blood in the streets, that's the time to buy. So from these low levels, for me, that was the time to start dollar cost averaging in all sorts of different risk assets. I think it is a great, maybe opportunity of the year to actually get in after a nice fall in the markets. I say a nice fall, nice if you've been patient and saw it coming as we did here. But now is probably the time to start dollar cost averaging, waiting for new all-time highs to come, which I think are just around the corner. So thank you, Bruce. Thank you, everybody, for listening, and hope that was helpful.
Thank you very much, Matt. Always a pleasure. Good to be back on the show. And as I mentioned, we'll be over there in Dubai in May. So looking forward to that. But yeah, we'll be back on tomorrow as well.
Absolutely. Thank you, Bruce. Thanks, everyone.
Thank you. the great Matt Dixon with the Market Watch Report. Of course, we are going back to Dubai, one of my favorite places in the world. I love doing business in Dubai for a number of reasons. One, of course, this family office event that we just did down there was obviously a little different. But, historically, you go down, you're trying to do business in Miami, and, everybody's just out partying and doing all this stuff. And I have historically had as much fun as the next guy, maybe even more. But when I'm out doing business, I like to do business. And in Dubai, you can really do business. People are focused. They're there for a reason. And I like that. At this point in my career, I like that a lot. Dubai is one of my favorite places to do business, as a matter of fact. So we'll be there in Dubai, May 6th, 7th for the 25th anniversary of the Global Family Office Investment Summit. As well, I'll be throwing a Lives Amplified event there in Dubai following that conference. And then it's a little bit up in the air whether we go to Monaco for the Grand Prix, which is really what my heart's set on, to be totally honest, or we go to Doha, Qatar for the Qatar Economic Forum, which would also be very good. I mean, let's face it, very good. Or we come back to a high profile or a very important event here in the U.S., which I'm not even supposed to talk about. I'm not even supposed to promote it or talk about it. So I'm not sure. I'm setting up my deals with the guys, so I'm certainly not going to do it now. Looks like that one may win out. The U.S. is really hot, man. I'll tell you what, though. I'm thinking of getting a yacht there for the Grand Prix, and oh man, I'll tell you, it's really something else. It's really something else. The Monaco is beautiful, and during the Grand Prix, it's just absolutely amazing. It really is something else. So that's been a hard sell for myself, but I think that probably that will end up happening, but we'll have more on that as we come up. Now, we did do a recap and a skit of the Global Family Office Investment Summit, so I'm going to play that now. Now, of course, we have different interviews that we did, but I'm not going to play an interview today. I'm just going to play this skit, kind of a fun skit that we put together. And let me just share this. It's kind of a recap and a skit of the events. It was a lot of fun. And it was fun doing the skit, of course. Check this out. Here we go.
We're in Miami, on our way to the Trump International for the Global Family Office Investment Summit. Guys, stay tuned. This is our Lambo for the shoot we're going to do. So that'll be fun.
Submit or formalize these kind of transactions. I met with French Hill, who's like a gentleman. Well, gentlemen, it's been an absolute pleasure. You can find each of these guys and talk to them. I'm telling you, their wealth of information.
All right, we're in front of the Lambo. Hold that. Hit stop for a second.
Bruce, what's up, man? I knew I'd see you here at the Global Family Investor Summit.
Yeah, man, this is the place to be at the Trump International Resort. I mean, it doesn't get any better than this. So I hear you're raising some big money.
All right, yeah. So we just launched our new energy fund. So we're here to raise $100 million.
$100 million. Well, this is the place to do it. Global Family Office Investment Summit. All the big money is here.
That's right. That's why we're here.
But George, I want to introduce you to Crypto Gal. She knows all the inside cuts on the family office events.
All right. Hi, nice to meet you.
Nice meeting you. So what brings you to the summit?
We just launched our energy fund, and we're here raising capital for our newest venture.
Awesome. I have the perfect strategy to help you raise money while we're here at the summit. I'm super excited. We should talk. What's up, Brandy? I haven't seen you in forever.
I know, it's been since back in Jersey. Tell me what's new.
Well, I have some new clients. I actually wanted to talk to you about getting them on Global Boost because I know you have a huge reach when it comes to crypto and TV.
Yeah, fantastic. Let me introduce you to the guys right away. They're right over there.
Hi, Vin.
Hi. Do you know that our public sale is 40% achieved over the last 7 days?
That's amazing. You know, with what you're doing with the ESG and the Mindwave DAO, I think this family office event is the perfect place for us.
Bruce, we need the strategy now.
I have the perfect person for us, Crypto Gal. Meet Crypto Gal.
I love Bitcoin yield generation. Neela would be a perfect fit. Since Neela is ESG compliant and yield generates Bitcoin, it's a perfect fit.
Bruce, these deals are really coming together.
Anthony Ritosa pulled out all the stops on this one. There's so much money in the room, and the quality of everything is so high.
Vin hit it, George hit it, and we are hitting our goals. That's why I love it here.
It's going to be fun, guys. If you have not made the time to come in and see us, well, that's all right. We'll tune you in. We'll keep you posted, so to speak, because keep in mind, Global Boost Media is a place that's going to broadcast and showcase so many new investing products, people, and opportunities that you can learn about and be a part of. Maybe you're a family office. Maybe you're just some CEO and you say, hey, I have an idea. I'm a founder and I want some coverage. I want to be seen. I want to tell my story and get people out there. Hit up Global Boost Media and maybe we'll give you a chance to tell your story.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.